Hi, this is Peter with Quantum Edge AI. I want to discuss today the something that is a little bit more technical, which is what's called uh, option skew. We're leading up to the presidential election today, and there's a lot of potential volatility. But the reality is, it doesn't really matter who's president. So in regards to the financial markets, markets will inevitably go up, most likely because of the fact that uncertainty is decreased. And that's pretty much it. So, how do we take advantage of uh, potential volatility that's relatively meaningless? We can see here, if we look at the Netflix options, the 755 and the 755 put. Now, the The election is today, so we're going to see this larger skew towards uh, the recent option, this week option versus next week option. So if we're looking at this, we're thinking, okay, well, this is $9, and we are we're looking at the back week. This is what's called the front week, and this is the back week. And if we look at this and we say, okay, well, how do we take advantage of the fact that um, there's larger potential theta decay in this location, in this specific duration, than there is in this. If you look at the differential, it's something like $3.85 uh, between these. So we're going to see a lot more uh, theta decay in this specific option than this option. So let's that the re okay, so how do you take advantage of that? You take advantage of that via the calendar. So if we look at Quantum Edge AI, we'll see that the channel, there was a large movement gap up in Netflix, and then it flatlines here. And I think the flat line really corresponds to the fact that um, we have this election today. So there's going to be some potential volatility, but in my view, nothing. What we're going to see is it lands somewhere in this area between the closed forecast and the high forecast. I don't think we're going to see too much volatility in something like Netflix or or the markets in general. We're probably going to see some movement up, maybe a spike and then come back. But that's the trade-off. The trade-off is that you don't know what's going to happen. So what do you know for an absolute certainty? You know that there is option skew here, where this 755 is is overpriced in my eyes versus this specific option. So how do we take advantage of that? Via the calendar. Now, let's look at the calendar a little bit more in depth, specifically for uh, Netflix um, and this specific what's called delta neutral trading strategy. Now we're selling the 755 put. We're buying the 755 call. I mean, we're selling the 755 put and we're buying the 755 put. The long put is the second week, the back week, and the short put is the front week. Now, see this juicy theta decay here? That's $61. That's what we're trying to take advantage of. We're saying that, okay, well, the bias is to the upside. And according to the Quantum Edge AI forecast, we're going to be within this range. Now, do we know that for 100% certainty? No, we don't. But what we need to do is take advantage of the option skew and make the trade and say, okay, well, what is my total risk? My total risk is 410. But the objective here is for price to land between 736 and 776. And how we do that how we do that is by simply taking advantage of the option skew and trading as if it is a normal day. It That's the reality. The reality is that is Netflix priced any differently from today to tomorrow? Kamala and Trump are going to are going to spend equivalently. So the outlook on these positions is similar. There's no valuation change, future valuation change in these companies. So what does that mean? Given that we probably don't know anything that others know. The only truth is that of the option skew. And in my view, taking advantage of this theta decay here and this potential risk of $410 debit, it seems to be a solid trade. Because if you look at the skew again, you say, okay, well, this trade you could potentially make, let's say for example, this potential is going to be above 755. Um, we can actually even say, okay, well, if we have a down movement, we can adjust this calendar to be the 745, let's say. But you don't want to be negative here. The recommendation that I would trade, it's not a recommendation. This isn't investment advice, but this is a strategy that you could potentially be involved with. This is for educational purposes, and this specific trade is a phenomenal trade for delta neutral and taking advantage of the option skew. We can target the high forecast to give us a little bit more delta positivity here, so that in the event that price does increase or gap up, or you know at the for tomorrow, we're going to be in a good position. So even if we have this gap up movement, we're going to be able to take advantage of this theta decay. That's what we want to do. We want to take advantage of this theta decay because the truth is that the it doesn't actually matter who is president in regards to the financial markets. These markets are going to go up anyway because of the fact that we continue to print money. That's the reality. Um, you can also get into these trades if you look at this potential movement. You do not want to open this trade here unless you want to send off an order that is way below the midpoint here, and hope that it closes, and we can actually do something that um, we can send this trade off, send it at $3, and then we can adjust it like so, and say, okay, well, where is the midpoint now? You know what? Wait a minute. Are we getting filled? No. Okay. Maybe 310. This is a sim trading account, so it's not going to fill at lower midpoint values. Let's say 320. Wait another 30 seconds. It's sim, so that's the reason why it didn't cancel the other orders quickly. But so the mark is 340. Your order is here. You're going to continuously increase this value until you get a good fill. And then we're going to approach the midpoint of the bid-ask spread, but we're not going to go above it. We're going to be patient with these trades because we do not want to take a loss on the bid-ask spread. That's the first mistake traders make, is just sending off orders, blasting off orders, and not considering the bid-ask spread and trying to creep into that trade and get in taking advantage of the minor volatility in the options. So we're going to do this for multiple trades at a time. That's the goal. And when you close this position, when this fills, you want to go to the risk profile. You can actually adjust it to have the first trigger OCO, uh, and then create an opposite order, and put your profit target where you want it. And we can say GTC, GTC. So now this midpoint is rising a bit because it's increasing slightly. But we can say 4 and 5. I don't particularly like doing this in creating the profit target immediately at the same time, but you can if you want to be a little bit less aggressive. So that's the trade. But it's not only the trade that matters, it's how you enter the position. You need to get involved with the position and make sure you're not getting killed on the bid-ask spread. Thank you.